Every time the Federal Reserve speaks, the markets move. Stocks swing, crypto reacts, gold shifts. But what if the next market move is already hidden inside the Fed minutes, and instead of using complex charts, we use miniature figures to understand it? Once you see this method, you'll never look at Fed news the same way again. Let's be honest. Most people feel lost after a Fed announcement. Headlines say the market is rallying, then crashing, then rate cuts are coming, then inflation is still a problem. You're left wondering what is actually going on. You're not alone. Even experienced investors get confused because the Fed doesn't speak in a direct way. They speak in coded language. The secret to understanding markets isn't fancy indicators. It's understanding who has control in the economy at any given moment. That's where this visual system comes in. By using miniature figures as metaphors, complex economic signals suddenly become simple. By the end, you'll understand what the Fed is really saying, where markets could move next, and how to position yourself more intelligently. Imagine this table represents the entire economy. Now picture 4 miniature figures. One represents inflation, one represents the Federal Reserve, one represents the consumer, and one represents the market trader. Every Fed decision is a battle between these forces. When you read the Fed minutes this way, it turns from a technical document into a story. Recently, the Fed minutes have been showing that inflation is slowing, but not fully defeated. The job market is still strong, and growth hasn't collapsed. In our miniature world, that means inflation is weaker, but still standing. The Fed is tired of hiking rates, but not ready to completely stop. The consumer is still walking, not falling. And the trader is getting excited too early. That combination tells us something important. Whenever traders get excited before the Fed truly pivots, markets become volatile. We've seen this pattern again and again. This is where many retail investors make a mistake. They react to headlines instead of positioning before the real shift happens. There is one signal that matters more than all the noise. The most important word in the Fed minutes isn't inflation or rates, it's confidence. When the Fed says they are confident inflation is fully under control, that's when policy truly shifts. Right now, they are talking about progress, not victory. That difference is huge. It means sudden rallies can be emotional, pullbacks are still possible, and the bigger trend is still forming. Smart investors prepare instead of chasing. Think about your own experience. Have you ever bought into a big rally after exciting news only for the market to reverse? That happens because expectations ran ahead of reality. The market trader figure always wants to move first, but the economy moves slower. So how do you use this approach? Start thinking in forces, not headlines. If inflation continues to shrink, that supports stocks. If the consumer weakens sharply, risk rises. If the Fed sounds patient and cautious, volatility stays in the system. You're not trying to predict the future perfectly. You're tracking the balance of power. It's how professionals think. They don't chase every news headline, they observe how expectations are shifting. Markets don't move just because news happens. They move when expectations change. The Fed minutes give clues about those shifting expectations, and this miniature method simply makes those clues visual and easier to understand. Once you start seeing the story behind the data, fear starts to fade. Decisions become more logical and less emotional. The next time the Fed speaks, don't panic, don't chase, and don't freeze. Picture the miniature world and ask one question: who has control right now? That answer will guide your decisions far better than any dramatic headline ever will. If this helped you see the market in a different way, stay connected and keep learning to read the system instead of reacting to the noise.